Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Dumpling Top Pattern, a powerful bearish reversal pattern that can signal a potential market downturn. Understanding this pattern can give you an edge by helping you identify when an uptrend is losing steam and a reversal is likely to occur. By the end of this video, you will learn how to spot the dumpling top, interpreting its signal and applying it to your trading strategy effectively. So stay tuned to ensure that you don't miss out on any critical insights to transform your trades. Now we start by understanding what the dumpling top pattern is, and the dumpling top pattern is a bearish reversal signal that appears at the end of an uptrend. This pattern is characterized by a round top resembling the shape of a dumpling. An indicator indicates a shift from bullish to bearish market sentiment. Recognizing this pattern can be crucial for traders looking to capitalize on potential downturns. To identify a dumpling top, look for a series of small body candle sticks that forms a round top during an uptrend, and as you can see, these are representation of small candlesticks that that are forming a round top. As we can see, this is an example of the round top that it is forming to indicate from bearish to bullish. The candlesticks, the small candlesticks, often indicates doji, often includes the doji or spinning top or pin bars, which suggests indecision in the market. This phase signal that the bullish momentum is warning and the sellers may soon take control. That's what the meaning of this top, the dumpling top, is all about. Next, we need to observe for a gap down. A gap down, a critical component of the dumpling top pattern. This gap down occurs when the price opens significantly lower than the previous close, confirming that the bearish reversal is coming. Following the gap, you should see strong bearish candle that reinforce the downtrend. As you can see from my screen, following the gap, you should see a strong bearish candle that reinforce the downtrend. We can also add our volume indicator to further validate this pattern. The volume indicator further validates this pattern, and you will notice a declining volume as market consolidates in this area. However, as the gap down occurs, a bearish momentum picks up as the market increases. The volume typically increases, confirming the strength of the reversal. And as we can see from this area, after the gap down, we can see the volume increased. There was an increase in the volume. This is the increase in the volume, as we can see it from my chart. In addition to the core clues and the volume analysis, you can use technical indicators such as your RSI. We can use indicators like our RSI and our MACD. You can use a MACD indicator and our RSI to confirm overbought and oversold conditions in the market before reversal. These indicators can provide additional confidence when identifying a dumpling top. And as we can see at this area of the market, the MACD shows that the MACD line is trading below the signal line, showing bearish sentiment. And as you can see, the RSI is going below and is about going to its is at its overbought region, moving down to its oversold region. Overbought region, that's over 60%, showing signs of bearish sentiment will soon come into the market. Now let's see how we can trade using the dumpling top pattern. Let's see how we can incorporate this trading pattern to our strategy. Once you have identified the pattern, it is crucial to know how to trade it effectively. This session will guide you through entry points, stop loss placement and profit targets. This approach ensures that the reversal is confirmed, reducing risks of false signal. Alternatively, you can use a sell order. Let's see how we can enter. You can use a sell order to enter, but the ideal entry point for a short trade is after the gap down. Once you see the gap down and the confirmation bearish candle after the gap down, you will enter your trade, and this approach ensures that the reversal is confirmed, reducing the risk of entry. This is where you typically want to enter after you have confirmed your gap down and your bearish candle. Here, after the gap down, you want to enter your trade, or you can use a sell limit order near the resistance area or the resistance level, that's the high of the chart. You can use this particular area because this area would be an area of resistance in the market, allowing you to enter at a favorable price, potentially increasing your profit potential. Now, where do we drop our stop loss when we enter this trade at this area? To manage our risk effectively, we put our stop loss slightly above the highest point of the dumpling pattern. Slightly above the highest point of the dumpling pattern. This placement protects your stop loss, protects your trades if market unexpectedly resumes in the upward trend. Remember, no trading strategy is foolproof. No trading strategy is 100% certain that it will go in your direction. So we have to trade using a stop loss. When setting profit target, you have to consider using Fibonacci retracement level, or you measure the height of the pattern to project potential downside move. Or you can also target your previous low, you can target your previous support areas in the market, such as this area in price. This place is a previous support area that you can target. You can target here, or you can target a fixed risk to reward of 1:2, as the case may be, meaning your potential profit should be at least twice your risk. Now let's see some practical tips to enhance your trading strategy. We have to combine this dumpling top pattern with other indicators, some other indicator tools. For instance, using the trend line, you can use the trend line to confirm this dumpling pattern. Know that market is trending to the upside, and once price break your area of, okay, let's mark it out to get a better description of what we are talking about. This is our trend line showing that the market was in an upward move. The moment you notice price breaks below, you can still take your trade once price breaks below your trend line to further confirm your trading setup. In case you want to add other technical tools to your trading, to this particular forex trading strategy, we can also add moving averages to show exactly when price decides to go below our moving average, confirming that we can sell. As you can see, when we added the 9 moving average, we can see at this area we decided to sell, that market price was trading below the moving average, which signals and further confirms our trading strategy that market is moving to the downside. So these are the technical tools that we can further add that would help us with the overall market direction and to support our decision making on trading this dumpling top pattern. Always wait for confirmation before entering your trade. The gap down is a crucial element of the dumpling top, so entering before this occurs may lead to premature trades and potential losses. If you decide to enter before you see this gap down, it might lead to a premature trade or might lead to potential losses. By following these guidelines and practicing proper risk management, you can effectively trade the dumpling top pattern and potentially improve your trading results of this strategy. Remember, consistent trading or consistent success from trading comes from thorough analysis, disciplined execution and continuous learning. Before you start trading, always decide to practice your trading strategy on your demo account before deciding to apply it on a real life market. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.